So let's walk through how you can use the right side of the ledger. So first, let's talk about the left side of the ledger so we kind of understand what we're talking about. So a ledger, you just think of a line straight down the middle of a page, and then a vertical line, and then a horizontal line. So we're going to talk about the left side, okay? For any of you accountants out there, our ledger is going to be backwards. Why is it backwards? Because we want you to think differently than the traditional way of thinking about investing, etc. Okay, so first you set up this high cash value whole life insurance policy for infinite banking. Now, not just high cash value in the beginning, it's got to be high cash value for the long term. This is something, even if I'm buying it at 59, that I'm going to have for 30 or 40 years, maybe more, right? I always say 59 is halfway. So you fund the policy with premiums. Think of that as your capitalization. You're building up cash value, okay, that you're going to go put to work. So don't think of it as an expense. And it's got guaranteed growth, dividends, compounding continuously, uninterrupted, right? So instead of pulling cash out, you borrow against it. You use the policy as collateral. This way your money never stops compounding, even while you're using it, because you're going to use it as collateral. So, okay, now what we're going to do is we're going to use this as an example of, on the right side of the ledger, I'm going to buy multifamily property. So instead of using my own cash, I'm going to take out a policy loan and use it as the down payment for the multifamily property. Make sense? So you find some cash flowing multifamily property. Let's say a 12-unit apartment complex. You use the use the policy for the down payment, and you get a mortgage for the rest. Does that mean you go to the bank? It doesn't have to mean that. You can go to the seller. The seller might give you more than, let's say, 80-20 loan to value, right? So they might require less than 20% up front. Why would they do that? Well, your price, my terms. That's a normal kind of concept in real estate investing, right? Okay, so you use whatever the down payment is, and let's say it's like something that's really rough. Maybe they'll finance 100% of it, but you need to renovate it. Then you use your policy for the renovation, right? So the property starts generating a rental income, creating cash flow. Now your dollars are working in two places at once, right? They're still growing inside your policy, untouched, uninterrupted, constantly compounding. And the same capital is now working in the real estate, generating rent. Wow, that's pretty good so far. Is that it? No, it's even better. So now you're going to have the money flow back into your policy, because hopefully we don't need that money to buy our groceries, right? We can keep this investment machine growing. So you're producing income, but instead of spending it or letting it sit in a traditional bank, you recapture it in the policy. And when you put the money back in the policy, it's going to pay down the loan. So every dollar that you put back in is the dollar that's available again to do what? Loan it back out whenever you want. As you pay down the loan, your cash value increases, meaning you can borrow against it for the next deal. Okay, so this is important because we repeat this cycle, constantly buying more multifamily properties and increasing your cash flow, right? Sometimes people go, well, that's only $400 a month positive cash flow. Well, you get 10 of those and that's $4,000. You get 100 of those. You see where I'm going with this, right? And if you had 100 of them, or some kind of, if you had 40,000, 80,000 a month coming in, and you had depreciation and everything else, and the thing was still growing, you tell me you couldn't get excited about that? I get excited about just talking about it. So what happens is you create velocity of money, where the same dollars keep working over and over again without ever leaving your financial system. So it's kind of like becoming your own banker. It's like your financial system. Excuse me. Ultimately, you're going to need more policy, and you're going to need two things: more policies, because the money flowing back into the policies won't fit in the original policy, and you're going to need more assets. Sounds simple, right? But you know, those are two challenging things, and we can help you at Create Tailwind with how to do that. But more policies equal more capacity, more capital capacity, right? Capital capacity, that sounds good. More capital, more multifamily acquisitions. more properties, more cash flow, fueling the cycle further. Okay, so it builds up. Think about this as a 10-year project, not something about going and getting rich quick. Okay, so eventually you eliminate the need for traditional banks altogether because your private banking system is funding all of your deals. Okay, now I've talked a lot about this book, but it's Letters to My Son by J.D. Rockefeller. Okay, that might not be the exact title, but if you search that, you'll get it. He says in there, the hindrance to building my wealth, to becoming the wealthiest man in the world, has been the banks. But now I am the bank. So this isn't new. This has been around for hundreds of years, okay? It's proven. So when you, again, just kind of, and I'm going to give you an example here in a minute, okay, just for clarity, but using your infinite banking system for multifamily investing. Now, where it says multifamily investing, put in SaaS business, put in acquiring businesses, put in whatever you want to go out there and do to start making money and start building cash flow, okay? Cash flow is more important than growing that value of that asset, okay? Cash flow is king. So in using infinite banking and the right side of the ledger for multifamily investing, your money never stops compounding in the policy. That's so important. Okay, the compound effect, a penny doubling, all of these things, they show you how uninterrupted compounding is so incredibly powerful. Your real estate grows exponentially with cash flow. Okay? So the value, you're going to have equity in there. And if you do any rehab, you're going to have more equity that you can borrow out, buy more properties, borrow out, buy more properties. Okay. You create a self-sustaining financial system that funds itself, that you control. Okay. So over time, you're going to build generational wealth that the whole time keeping full control of the system. There's no one that can blow this up. Only you. Not blow it up, but you're in control so that you do your due diligence. You're not going to invest in something reckless. By the way, what I just described is exactly how banks operate. Moving money in cycles to maximize efficiency. But now you're the bank. Use leverage to build an unstoppable real estate empire. How big do you want it to be? It depends. Who knows? Okay, so I'm going to give you like just a simple example on $1 million apartment complex. Okay, so you take a $200,000 loan for a down payment. You buy $1 million apartment complex with a mortgage, and the property generates $10,000 a month in rent, with $3,000 a month net cash flow after expenses. You use that $3,000 to flow back into the policy, which then pays back the policy loan, freeing up cash value again, dollar for dollar. Within a couple of years, you can recycle that capital into another multifamily deal. Now, do you have to wait? Again, remember, I'm using a small amount. So if you want to do it sooner than a couple of years, you can. We just got to capitalize more. Okay, so over a decade, you would own multiple properties, all funded through your own system. That's how you scale wealth without ever breaking the compounding curve. And if you want to structure this deal for tax efficiency, and how would you structure the deal? Okay, well, if it cash flows, then price isn't as important. Multifamily, we're looking at this we're looking at it from not a subjective point of view, right? We are looking at it as the numbers. Do the numbers make sense? Hey, I think this property is worth $1 million. Well, the numbers will tell you whether it is. Right? And you can get the ratios on any website. There's a ton of real estate investing websites. Hey, what ratios should I look at? What's a tool that I can use for due diligence? What's the average per square foot multifamily going for in this zip code? There's lots of things that you can use for to help you analyze the deal. And so then on the deal structuring, like the thing that you want is give them the price that they want and make them finance 100% of it. Now you want 10% down, you want 20% down, then the price changes, right? I mean, make your choice. The price changes, seller. And if you can find distressed properties that you can go in and rehab, so our $1 million property, and the books have to say it's worth $1 million, but we go in and we rehab each unit as they come up for on the lease ends, and then we increase rents by 30 or 40% because it's a nicer property. Once we increase rents by 30 or 40%, what happens to the value of the property? It goes up by 30 or 40%. So now if we could borrow, let's just say, let's make the math easy. We're going to borrow 40% out of that property. That means we can go buy, even at 20% down, 2 more properties just like that. Now we have 3 multifamily properties, but what are we going to do to the 2 that we just bought? We're going to do the same thing. We're going to rehab them, increase the properties, then see how this like just snowballs. And pretty soon you'll have 10 of these properties, 10 multifamily properties that are bringing in $30,000 or $3,000 a month. So that's $30,000 a month. And that's tax, it can be tax efficient because everything that you buy and everything that you do, you can depreciate, and you can do a cost segregation, and you could accelerate the depreciation. This is why people keep on buying more and more and more, because they want the depreciation. And so when you use the right side of the ledger for creative investing, and when I say creative investing, just not, I mean, you could put it in Wall Street. If you had some kind of creative Wall Street strategy, then I'm cool with that. But not buy and hold and put your money in there and have a financial babysitter and pay them a percent and pay their broker dealer a percent and pay the wholesaler a percent, or a percentage, and like all of these eroding factors. Don't do that. It's not how people get wealthy. The right side of the ledger is where people get wealthy. Okay. And you have to shift your thinking from traditional to, I hate to say the word alternative, but it's not alternative. It's really elevated thinking, right? It's anybody can go buy a mutual fund or put money in a 401k, right? I mean, it doesn't take any knowledge, doesn't take any understanding to do that. It takes trust. It takes blind faith. It takes buying a reassuring lie, but it doesn't take any really special talent. So what I want you to do is I want you to focus on developing that special talent for the right side of the ledger. Is it multifamily real estate? You could study this for an hour a day for the next 6 weeks, and you'll know more than 95% of the people out there. That means watching a YouTube video, taking courses, reading books, whatever it is, for an hour a day for the next 6 weeks. Then start implementing this. And how do you make it better? Well, you do it with infinite banking, because infinite banking closes the system. It closes the system and it makes your money work for you in 2 different places. And it's more tax efficient because the insurance policy, once the money's in there, it's never taxed again. And there's a tax-free death benefit. And the insurance company can't tell you no on the loan. They have to give you the loan. They have to give you the money up to 100% of your cash value. Now, most of you know all of those things, but the right side of the ledger, that's what's holding you back because you're not sure what to do with it, right? Okay, so what I want you to do, it's kind of like Earl Nightingale in The Strangest Secret. I want you to pick one thing that you want to learn about over the next 6 weeks about how to build your wealth or assets like multifamily real estate, industrial real estate. Could be SaaS businesses, could be financing opportunities for dentists, and you're in dental sales of some sort. I don't know what it is, because one of the tenets in The Richest Man in Babylon that I think that you really need to take to heart is invest in what you know. You have either access to or in your head uncommon knowledge about something. And if you don't, 6 weeks, an hour a day, and you'll be an expert. Okay. So what if you did it 2 hours a day? You work your 9 to 5, and then from 5 or from 6 to 8, instead of watching TV, you study something for the next 6 weeks. How proficient are you going to be? You find the right tools to do your due diligence. Then where's the risk? Is there risk if you're really becoming that level of an expert and you have the tools that you need, right? If I said to somebody who is an expert craftsman, I want you to build me a shelf in my garage, they'd say, no problem, I can do that. I know exactly how to do it. It's the same thing, but they didn't know how to do it the first time they did it. They had to study it. They had to follow directions. They had to see what somebody else did. They had to watch videos. They had to do something to become that expert. And I'm telling you, pick something where you can go buy cash flowing assets for the right side of the ledger, use your infinite banking system. And if you don't have one, then reach out to us at createtailwind.com, or you can reach out directly to me at jimoliver@createtailwind.com. You could join our community at community.createtailwind.com, which is, I think you have to be a member to be on this meeting, right? But you can reach out. You can send a message inside the community. Reach out somehow and build your system so that you can go out and buy these cash flowing assets, buy these wealth stacking assets, just like a bank does. What are those assets called from when a bank does it? Loans, right? Consumers, we've been taught that a loan is a liability, but a bank knows whoever holds that note, it's an asset, right? And they back up their assets, because they're not stupid, with collateral. You're not getting the loan unless they, and when I loan money, hard lending money, I want the person to, I want them to default, because the asset's worth more than the loan. So where's my risk? There's very little risk. It's calculated risk, which is exactly what we want. If you look at, put in any story that you want to about somebody who became wealthy, and what you'll see is, it might say risk taker or something like that, but it's calculated risk. What does that mean? Just like I said, the bank isn't giving you that loan unless you have collateral that they would want to own, that they could liquidate and get all their money back. They're secured lenders. So you need to be a secured investor. Okay. If it's that property that we were talking about earlier in the example, it's $1 million and it's cash flowing $10,000, net $3,000. Well, guess what? That's a calculated risk that property, because of what it produces, not what it looks like, not where it is, all of that, it's what it produces. It's not that your opinion, it's what the books say that property is worth, right? So where's the risk? You have insurance on it, so if it burned down, you're still okay, right? You have a trust, and a trust doesn't do anything, so it can't be sued. And you don't own anything because everything's owned through the trust, so you can't be sued because you don't have anything, right? Even if you were liable for something, you don't have anything. So there's these little things that we eliminate the fear, because risk equals fear. In the right side of the ledger, there's no room for that. And I'm going to end this with this. If you're afraid, don't do it. If you're doing it, don't be afraid. So that's a good quote to remember for the week. And remember, you got to win Monday to win the week. So today is the day to win. So make a commitment to learn something for the next 6 weeks and take action. Thank you all for being here. I'll see you next week, and Godspeed to you all.